recession has started and it is time to take action. In this video, I'm going to show you what you can do to protect your finances and make sure that you're ready for whatever comes next. My name is Kevin Vieira and I'm here to talk about the 2023 recession. Now, a lot of people are saying that it's already started and that we're going in for a rough ride, but don't worry, I'm going to show you how you can protect yourself and your family no matter what happens. So stay tuned because this is something that you don't want to miss. It's no secret that the current economic climate is uncertain. Reports showing more than a third of small businesses couldn't afford to pay their rent in October, and 50% of employees expect potential layoffs. The Federal Reserve is only 3 weeks away from another rate hike, with more expected to fall in the near future. All of this has raised concerns about whether a recession could be on the horizon. Now, what is a recession? A recession is typically defined as 2 consecutive quarters of declining gross domestic product, GDP. Throughout history, there have been a matter of 18 different recessions since the 1940s, with the longest lasting for 18 months. Recessions often lead to increased unemployment rates, reduced consumer spending, and a decline in asset values. The average investor just barely manages to outperform inflation with an annualized return of 20-year investments at just 2%. During recessions, stock market volatility is higher, investing becomes riskier, making it harder for investors to understand when and how to move their money around. When it comes to building wealth, it is important to recognize that there's always going to be a reason not to invest, especially during times of economic downturns. However, there are some strategies that can be employed when trying to build wealth through tough economic times. One way investors can weather an economic storm is by diversifying their portfolios across different types of investments, such as stocks, bonds, real estate, and cash equivalents like savings accounts or money market funds. This strategy helps mitigate losses if one type of investment loses value while others remain strong or even increase in value. Additionally, investors should consider investing in companies or industries that tend to weather recessions well, such as technology companies, healthcare providers, as they may provide more stability during difficult times. Investors should also look into tax-advantaged investments like 401ks or IRAs, which may help lessen the impact of taxes during an economic downturn. And finally, investors should avoid trying to time the markets by predicting when prices will go up and down, and this usually ends up costing them more than simply staying invested throughout any given period, regardless of market fluctuations. Now, every generation has its moments where it questions whether or not it's a good idea to stay invested. This year is one of those times. The global pandemic and economic downturn have put a strain on every nation. It is important to realize that things can and will get worse than whatever you expect. Markets are unpredictable and often volatile, so it is wise to be prepared for any outcome. Speculation is not a sign of a healthy market, and the more diversified you are, the better this means investing in stocks, bonds, real estate, commodities, etc. Having a balanced portfolio will help you protect your investments from extreme losses due to market conditions. Good financial habits should be practiced in both good and bad markets. This is especially true now since stocks may have seemed like an attractive investment option during boom periods, but careful consideration should be taken when deciding if they are right for you in bear markets too. It was found that half of the S&P 500's strongest days in the last 20 years occurred during a bear market. This means that investing during a recession is one of the most profitable times to invest as long as you know how to navigate through volatility. Researching different asset classes and analyzing current economic conditions can help provide insight into what types of investments may perform better than others in uncertain times. Having an understanding of risk management strategies such as stop losses, trailing stops, and options can also pay dividends when it comes to managing your investments over time. And additionally, having patience plays an important role in achieving success when investing over long periods of time, whether that's months or even years. Although there is no guarantee of ever making money from investments, having a solid plan with defined goals and objectives can go a long way towards helping you achieve your financial targets over time. No one knows what the future holds, but understanding what risks are associated during investing during a recession can help you prepare for any situation, good or bad, that may come your way by employing strategies like diversifications, tax-advantageous investments, and avoiding trying to time the markets so you can stay confident that your true financial future remains secure through any type of economic turbulence. The recession of 2023 is here, and it's time to take control of your finances. We have discussed several ways to protect and make money in such times, but the key is taking action. Whether you decide to invest in a business, diversify your portfolio, or start an online side hustle, now is the time to seize the opportunity and gain financial security while building wealth. Every day we're presented with new opportunities, challenges, and this recession has been no different. But don't be afraid of change. Embrace it. With the right strategies and tactics, you can use this downturn as an opportunity for growth. Take control of your finances now by creating a budget, researching investments, and ideas of starting a side business that setting your goals for yourself are realistic yet ambitious. You see, the choices you make today, while having a lasting impact on your future financial security, don't underestimate the power of preparation when it comes to protecting what's yours. So remember, be aware of trends in the economic, macro, and micro, and stay informed about investing basics as well as advanced techniques that can help you maximize your returns while minimizing your risks. The future is uncertain, but armed with the right information and determination, you can make sure you come out ahead despite any economic turbulence ahead. I hope this video has given you valuable insight on how you can protect yourself financially during future recessions and the upcoming recession. Now it's up to you to put these lessons into action. I hope you loved the video. Be sure to like this video if it was helpful and subscribe that we continue helping to people like you personal financial journey. So we invite comments below. So please share your advice and questions related to making money during recessions, and let's keep learning together. Kevin out.